Hey everyone, welcome back to Upside Down Data. Today I want to talk about whether or not crypto is really guaranteed to get destroyed in a recession. So an assumption that I've made and that a lot of people have made is that if we hit a recession and if the stock market falls off a cliff like it did in 2000 and 2008, that crypto will go right along for the ride, that it will fall down to prices that we can hardly even imagine right now. But I want to give a potential counter argument to that idea. So that remains my base case that crypto would probably follow the stock market. But I do think there's an interesting hypothesis to be made that maybe crypto could actually do decently well in a recession. So why am I saying this? Well, really has to do with some observations from the way that the market has been trading recently. So obviously this is not based on much data, which is why it's not something that I'm saying with any amount of confidence or saying that this is the correct way of thinking about things, but it's something I think is going to be useful to keep an eye on as a possibility. So let's look what happened to Bitcoin the last couple of days. We had the market really selling off into the fears of Silvergate Bank collapsing, and then we had the Silicon Valley Bank collapsing as well. That kind of really led into this going down here. That was on back here on Friday when that all played out. But then we saw this massive reversal over the weekend and now into Monday, and now as I record this today, this huge upswing in the Bitcoin price. You know, we're up from the lows currently somewhere around 24%, massive move to the upside. What's interesting is how that compares to some other assets and how they've been moving. Let's go ahead and talk about gold. Look at what gold's been doing. It actually looks quite similar to what Bitcoin has been doing. Now, obviously, gold isn't as volatile, so it's only up 5.5%, but this is a notable move in such a short amount of time for gold if you just go back and look at this in context, going basically vertical. And this is notable because the stock market was trading basically sideways today. It closed, just slightly up on the day. And then if we look at the treasury market, the bond market, we see that the 2-year treasury has been falling off a cliff the last few days. We've gone from a yield of just over 5% down to about a yield of 4%, a move of almost 4% in just a couple days, which, as you can just see based on context, is a pretty massive move. And what does this maybe suggest? Well, when you look at this, when the bond market, the 2-year bond market trades like this, you really usually only see this kind of extreme move in very bearish times, basically heading into recessionary periods. Look at this period through here going into March of 2020. This was kind of the last time when the 2-year really fell off a cliff in that same way. And if we go back and look for some other recessionary times, I'm going to actually go ahead and put this in the weekly chart just so you can see this a little bit better. We're going to see the last time that was really falling off a cliff like that was in 2007, going into that recession. And we also see that playing out back here in 2000. So when you see the bond market start to act like this tends to happen in periods where you're going into a recession. Not to say that that's guaranteed, right? Anything can happen. It doesn't mean the 2-year is going to keep falling this way. But the general pattern across these different asset classes has been the market trading as if it's maybe getting ready for a recession. Certainly a different tone than we've had so far in this bear market. So when we think about that, then one thing that's notable is that crypto, so here's Bitcoin, here's Ethereum, has been trading a heck of a lot more like gold during this period when the market seems to be acting more in kind of a prepare for recession type of behavior more than it has in, for a long time, really since previous recessions have hit. And so let's just humor me here. What if we actually use gold as an analog then for crypto? So obviously just a few days is not to say that this correlation with gold is going to hold and that we can't have it start acting more like the stock market. But let's just imagine it does and think about what that might mean. So I'm going to go ahead here and flip over to the weekly chart of gold. And what I want to do is look at these times of past recessions when they've hit and then what gold has done after. So let's start at the 2000 recession. So that recession is officially declared to have started in March of 2000. March 2001. So that's what it is here. So this is on the weekly chart as close as I can get to the beginning of March, right here. And look what gold did going out of that period. That was basically the bottom. Basically, gold had bottomed out in this kind of drawdown here at when the recession started, and just went absolutely crazy especially for gold from that period. You know, until the next recession hit, it was up 230%. And then look at what happened when that next recession did hit. So this is the start of the 2007 through 2009 recession here. And so you can notice that gold did draw down a bit going into that recession, but then once the recession actually officially started, rallied, you know, a max of 30%, a pretty decent move into that recessionary period. Now, it did go on then to have some corrections later on during that period, but had a decent rally kind of going into it. And then especially kind of as you come out of that period, shooting off to the upside, right? So the max drawdown here is about 14% from here, the start of the recession down to here, but then ultimately going up into 2011, you know, if you start from the beginning of this up through this period, up about 142%. So a short-term rally right as the recession started, some drawdown, and then a crazy rally to the upside. So in both of these cases, I'd say gold did pretty darn well leading out of a recession, right? Recession declared, went nuts. Recession declared, had a brief pullback here, but then went nuts again. Now, in the 2020 recession, it collapsed, it crashed, but so did the rest of the markets. Everything crashed here. And so that's one thing that's notable. Now, if we're going to compare gold to Bitcoin, the only recession that we can actually compare it to is the 2020 recession, which again is not a great one to compare it to because it wasn't really a recession, or at least not a typical one. So let's pull up the Bitcoin price here on another price axis so we can just compare the two. So you see that they acted relatively similarly during that brief recession here. But again, if we make the kind of bold assumption, which again is a very bold assumption based on such little data, but a very bold assumption that maybe, just maybe, Bitcoin could do something more like gold did going into and coming out of recessions than doing what the stock market does in those times, then what that means is that, is it possible that Bitcoin could do something more like this coming out of a recession we're about to see, or something more like this? So again, this is still way too early to know if gold is really the right analog for Bitcoin. And of course, it's never going to behave exactly the same, right? But even if Bitcoin ends to kind of errs a little bit more towards the side of gold than the stock market, it could actually set up crypto for a position that's way more favorable in a recession than I think anyone's giving it credit for. I think everyone's assuming that if we fall off a cliff with the stock market going into a recession, which history tells us would happen most likely, then I think the thing is that people assume that Bitcoin would have to follow. But I think this is an interesting kind of piece of data here. The fact that Bitcoin has been behaving in this way in the kind of the face of a possible recession, and then with the expectation, which has been happening in the market, that the Fed is going to reverse course way sooner than expected, given all of these potentially systemic risks that are imposed by these banks failing, then if you just assume that Bitcoin would be acting like the stock market, then why the heck is it doing this? Why wouldn't it not have just traded sideways or even crashed with anticipation that maybe the stock market's going lower? Why is it doing this? Now, there's different reasons. It could just be completely random. It could just be doing this and recouple it with the stock market later. But I do think that's just interesting to think about. So again, I'm not hanging my hat on this, and it's still not my base case. My base case is still probably that crypto would not do well in a recession. But this is really kind of made me think about if that assumption should be as strong as it has been this whole time. And I think as we see the data play out, we'll want to keep this in mind. And we'll have to see, is the data more in support of the hypothesis that the crypto will just mirror the stock market and collapse in a recession? Or is the data maybe pointing more of a picture that crypto could do very well in a recession, more like how gold tends to behave? And if the data ends up supporting one hypothesis more than another, we should probably adjust. It's not useful to keep an assumption that the data is not supporting. So I just wanted to bring this up as an interesting thought that I had today. So again, very speculative, obviously not financial advice. You should be making your own opinions. And this is obviously wild speculation at this point. Again, a few points of data is not enough to make a strong prediction. But the possibility exists. And so I think it's something that's going to be interesting to keep an eye on as we go forward. So as we go forward, if we do end up hitting a recession, I'm going to be watching very closely to the behavior of crypto and how it's comparing to what gold is doing versus how the stock market's doing. If it ends up following the gold path, that actually might be a sign for optimism during a recession, when I think almost no one else would be making that assumption. Very, very few people would be on that side of the market. And who knows, maybe that in and of itself, the fact that everyone expects crypto to get destroyed when stocks get destroyed, there could be some contrarian angles of that as well. So again, still not my base case, but something I think is interesting to keep an eye on. All right, if you like the content, remember to subscribe to the channel, give the video a like and follow us on Twitter, and also go check out our website, polaritydigital.io, where we have data from a bunch of our different models live over there.